Welcome to Kentucky Public Pensions Authority General Information Webinar. During today's webinar, we will discuss our complex retirement system, the system's plan funding, retirement eligibility, the benefit formula, and member self-service. KPPA administers benefits for over 410,000 members participating within at least one of the three retirement systems. Under the umbrella of KPPA, we administer County Employees Retirement System, often referred to as CERS, Kentucky Employees Retirement System, often referred to as KERS, and the State Police Retirement System, also known as SPRS. CERS and KERS have both hazardous and non-hazardous employees, while SPRS has hazardous employees. Each member is placed in a tier which is specific to their participation date. There are three different tiers, and we will get to those tiers in just a little bit. Knowing your participation date is essential to understanding how your benefits are calculated. It helps define your retirement eligibility and even defines your health insurance benefit tier. In addition to pension benefits, KPPA also offers health insurance benefits to eligible retirees and beneficiaries. For retirees with a participation date prior to July 1, 2003, KPPA pays a percentage towards the monthly contribution for health insurance premiums. For those with a participation date on or after July 1st of 2003, KPPA pays a dollar amount towards the monthly health insurance premiums. Additionally, those in the dollar contribution plan must meet certain service requirements. KPPA is a unique and complex pension system, but we are here to help you along the way. The plan funding is composed of three different sources: member contributions, employer contributions, and the return on investments. We will take a closer look at the first two sources on the next slide, but let's take a minute to discuss the third, which is the return on investments. The CERS and KRS Board of Trustees are charged with the responsibility of investing in the system assets to provide for the benefits of the members of the systems operated by KPPA. To achieve that goal, the board follows policies of thoughtfully growing the system's asset bases while protecting against undue risk and losses in any particular investment area. Let's examine the first two sources mentioned to better understand how the three work together to fund your retirement benefits. So let's take a closer look at the first two sources. The first source is employee or member contributions. Employee contributions are set by statute and depend on the type of service and benefit tier. Non-hazardous employees pay 5% of their creditable compensation, and hazardous employees pay 8%. Creditable compensation is earnings that must be reported to KPPA and is used to calculate retirement benefits. For members with a participation date on or after September 1, 2008, an additional 1% is withheld for health insurance contributions, often referred to as HIC. The 1% HIC is non-refundable. The second source is employer contributions. Recommended employer contribution rates are determined by KPPA's independent actuary based on data in the annual actuarial valuation. The CERS and KRS Board of Trustees adopt employer contribution rates necessary for the actuarial soundness of the systems governed by the respective boards as required by state law. The KERS and SPR rates are subject to approval by the Kentucky General Assembly through the adoption of the biennial executive branch budget, and the CERS board sets the CERS contribution rates unless altered by legislation enacted by the General Assembly. With statutory changes enacted in 2008 and 2013, retirement eligibility and the structure of payments changed significantly. This created three benefit tiers, tiers 1, 2, and 3. Tier 1 is for those members with an initial participation date prior to September 1, 2008. Tier 2 is for members that have a participation date on or after September 1, 2008 through December 31, 2013. And Tier 3 is for those members with a participation date on or after January 1, 2014. Tiers 1 and 2 are both considered defined benefit plans, and Tier 3 is considered a hybrid cash balance plan. We will discuss this more in detail on the next slide. As stated before, knowing your participation date is essential to understanding how your benefits are calculated, your retirement eligibility, and even defines your health insurance benefit tier. If you are unsure of your participation date, log into your member self-service account or contact our call center counselors with your PIN at 1-800-928-4646. As promised, let's discuss the difference of the plans. Tiers 1 and 2 are considered defined benefit plans, while Tier 3 is considered a hybrid cash balance plan. As the table states, a defined benefit plan pays benefits based upon a formula, and the benefit is a lifetime payment to the member with the option to leave a lifetime benefit to the beneficiary. Both of these characteristics can be applied to all three tiers administered by KPPA. A hybrid cash balance plan obviously shares some characteristics of a defined benefit plan, but also possesses characteristics of a defined contribution plan such as a 401k or a 457. A hybrid cash balance plan determines the value of benefits for each participant based on individual accounts. Now, let's move on to discuss how the retirement eligibility requirements differ based upon the benefit tier structure. To retire with full retirement benefits, meaning no penalty is calculated to reduce the benefit amount, a non-hazardous member is required to meet one of the following criteria. He or she must have 27 years of service, regardless of age, or reach the age of 65 regardless of service. Notice I mentioned only one of those requirements must be met to reach retirement eligibility. Hazardous members may retire with 20 years of service regardless of age or reach age 55 regardless of service. Tier 2 or Tier 3 members have the same eligibility requirements for normal or full retirement benefits. Non-hazardous members must retire under the Rule of 87 or age 65 with 60 months of service. The Rule of 87 states that a member must be a minimum of 57 years old, and their age plus their service must equal 87. For example, if a member wishes to retire at the earliest age allowed, they would need 30 years of service to add to their age of 57, which would satisfy the Rule of 87 requirement. 57 years old plus 30 years of service equals 87. Hazardous members must attain 25 years of service regardless of age or have reached age 60 with 60 months of service. Tier 1 and Tier 2 members have the option to retire early with the penalty to reduce their retirement benefit. For Tier 1 non-hazardous members, you must have at least 25 years of service but less than 27 regardless of your age, or be age 55 with 60 months of service. For hazardous members, it's age 50 with 180 months of service. Tier 2 non-hazardous members may retire with a reduced benefit at age 60 with at least 120 months of service, while Tier 2 hazardous may retire at age 50 with at least 180 months of service. Tier 3 members are not permitted to retire early and therefore must meet the requirement from the previous slide or take a refund of their accumulated account balance. As we discussed earlier, the three benefit tiers of retirement calculations are based upon a formula. For Tier 1 and 2, the same formula is used, but the variables within the formula differ. So for Tier 1 and Tier 2 members, the calculation for retirement is the member's final compensation multiplied by a benefit factor multiplied by the member's years of service. For Tier 3 members, the calculation to determine retirement benefits is the member's accumulated account balance divided by an actuarial factor. Final compensation for Tier 1 non-hazardous members is their highest 5 fiscal years with the highest monthly average. And for hazardous members, it is their highest 3 fiscal years with the highest monthly average. To clarify, your highest years or the fiscal years in which the monthly average is the highest. So there could be years that have less than 12 months, but may still be considered a high year based on the monthly average. Partial years can be used in determining the member's final compensation. And because we can use partial years in the calculation, only 48 months are required in the calculation for non-hazardous, and 24 months are required in the calculation for hazardous. Lastly, Tier 1 members can include payouts for compensatory time at retirement, as it is considered creditable compensation and can increase the member's final compensation. The second part of our formula is the benefit factor. The benefit factor is determined by statute and based upon the system and the type of service. There are several benefit factors for KERS non-hazardous and CERS non-hazardous, so be careful to review which one you apply to your benefits. If there's ever any doubt, you can calculate your benefits on Member Self-Service, which will use the correct benefit factor. Or you can look at your online annual statement for guidance. In this example, the member is Tier 1, non-hazardous, participating in CERS, and retiring August 1st of 2025. The calculated final compensation for this member is $45,623.76, and the member is retiring with 28 years of service. Based on the chart from the previous slide, we will use a 2.2% benefit factor. So let's plug these numbers into our formula. $45,623.76 multiplied by the 2.2% benefit factor multiplied by 28 years of service gives us the basic annual benefit of $28,104.24. Final compensation for Tier 2 non-hazardous members is their last 5 full fiscal year salaries. And for hazardous members, the final compensation is their 3 full fiscal years with the highest monthly average. To clarify, your highest salary years are the fiscal years in which the monthly average is the highest. Partial years may not be used in determining the member's final compensation unless the member did not have any full 12-month salaries. At least 60 months are required in the calculation for non-hazardous members, and at least 36 months are required in the calculation for hazardous. The benefit factor is again determined by statute and based upon the type of service and the amount of service. I won't go into each tier of service credit at retirement, but notice the more service with which you retire, the higher the factor is. I do want to point out that for those non-hazardous members that work beyond 30 years, the higher 2% factor is only applied to those years that are in excess of the 30 years. In this example, the member is Tier 2, non-hazardous, participating in CERS, and retiring January 1st, 2039. The calculated final compensation for this member is $42,100, and the member is retiring with 30 years of service. Based on the chart from the previous slide, we will use a 1.75% benefit factor. So let's plug these numbers into our formula. $42,100 multiplied by the 1.75% benefit factor multiplied by 30 years of service gives us the basic annual benefit of $22,102.50. Let's break down the formula for Tier 3 members. Remember, the formula for Tier 3 is the member's accumulated account balance divided by an actuarial factor. As you see on the slide in front of you, the accumulated account balance is comprised of 4 pieces: member contributions, employer pay credits, based interest, and upside sharing. As mentioned before, a non-hazardous member's contribution is 5% of creditable compensation plus the additional 1% health insurance contribution, or HIC, and a hazardous member's contribution is 8% of creditable compensation plus the additional 1% HIC. Also, as a reminder, the 1% HIC is non-refundable should a member terminate employment and take a refund of their account. The employer paid credit for non-hazardous members is 4% and 7.5% for hazardous members. A base interest of 4% is applied at the end of each fiscal year and attributable to both the member contributions and the employer pay credit. Lastly, upside sharing interest is an additional interest credit that may be applied to a Tier 3 account, assuming certain criteria has been met. Let's dig into the concept of upside sharing. Upside sharing interest is the additional interest credit that may be applied to a Tier 3 account. It is not guaranteed. The following conditions must be met before upside sharing interest is applied. The system's geometric average net investment return, often referred to as gainer, for the last 5 years must exceed 4%. If this is true, the member is eligible for upside sharing credit, assuming he or she has been active and participating in the fiscal year. If the gainer exceeds 4%, the member's account will be credited with 75% of the amount of return over 4%. It's applied to the account balance as of June 30th. Again, the formula for determining the monthly annuity payment for Tier 3 members is to divide the accumulated account balance at retirement by an age factor. The factors are based on your age when you retire, and they are different factors for non-hazardous and hazardous members. The tables are based on current age and death actuarial studies and could change in the future. Typically, the older you are when you retire, the lower the actuarial number will be, resulting in a higher payment. In this example, the member is Tier 3, non-hazardous, participating in KERS, and retiring September 1st, 2044. This member is retiring at age 57 with 30 years of service. The accumulated account balance is $205,398.16. When we use the chart on the previous page, the non-hazardous factor for age 57 is 162.547424. So let's plug these numbers into the formula to arrive at the member's monthly life annuity. $205,398.16 divided by 162.547424 provides us with $1,263.62. This is the member's monthly life annuity amount. Member self-service is a great tool to help our members prepare for retirement. We encourage you to give MSS a try if you haven't already done so. In order to register for MSS, you will need your Social Security number, date of birth, 4-digit personal identification number or PIN, and your email address. If you are unable to locate your PIN, I encourage you to go to the login page for MSS and click Need to Register. There you will be prompted in Step 2 of the registration process to request a new PIN number via email, or it can be sent to your physical address on file. Once registered and logged into your MSS account, you can update your contact information, request an account balance letter, calculate a benefit estimate or service purchase, and even apply for retirement online and upload documents such as your beneficiary designation form. MSS also includes an internal messaging center where you can access KPPA correspondence as quickly as logging in. There are several ways for you to contact KPPA. You can speak with a benefit counselor by calling the office at 1-800-928-4646. If we are experiencing a high call volume, please take advantage of our Callback Assist feature. This gives our callers the option to have a counselor call them back rather than to wait on hold. You may send your general questions or concerns to our KPPA email address at kppa.mail@kyret.ky.gov. Please remember, this is not a secure site, so we ask you to refrain from sending confidential information to the inbox. Please note it's important to keep your email address up to date for special announcements, registration opportunities for live webinars, member newsletters, and more. The office location and mailing address is 1260 Louisville Road, Frankfort, Kentucky 40601. Also, please make sure to like KPPA on Facebook, follow us on Twitter, and look for YouTube videos online for more information regarding your retirement benefits. It's important to visit the KPPA website at kyret.ky.gov for all of our publications, self-service sites, announcements, and the most up-to-date information. Whether you're new to KPPA or you have been planning for your retirement with us for years, we're excited to have you as a part of the KPPA family. Our legal notice concludes our general information webinar. This, of course, is intended for general information reference only, so if you do have specific questions regarding your account, please contact us at the 1-800 number listed on the screen. On behalf of myself and the other KPPA staff, we thank you for attending today's webinar.